All right, so when you think about investing, there are two names that just tower over everyone else, right? Warren Buffett and Charlie Munger. Today, we're going to pull back the curtain and really dig into their playbook. We're talking about a lifetime of wisdom, broken down into a framework you can actually understand.
I mean, you have to wonder, right? How on earth did two guys take a totally failing textile mill and turn it into Berkshire Hathaway, this absolute behemoth of a company? You'd think there has to be some kind of super secret complicated formula. But the truth? It's actually way more straightforward than you'd imagine.
Yeah, their success, it's not about some crazy algorithm or those insane financial models you see coming out of Wall Street. Nope. It's all built on a handful of really basic, timeless ideas about how to think about business and what it's truly worth.
Okay, so let's get into it. The whole thing, the entire foundation, it all starts with one single, powerful shift in your mindset. Get this first principle down, and it completely changes the way you look at the entire market.
So you've got these two different mindsets. On one hand, you have the stock trader, glued to the screen, watching the little ticker symbols go up and down every second. But Buffett and Munger, they're on a completely different planet. They think like business owners. They're not just buying a stock, they're buying a piece of an actual living, breathing company.
And this quote from Buffett, it just nails it. This is their whole idea of the circle of competence. See, you don't have to be an expert on everything. Not at all. The real trick is to know what you do know, to draw a circle around that, and then just wait. You wait for that perfect opportunity, that perfect pitch to come right into your sweet spot. You don't have to swing at anything else.
And that's why they can just sit back and ignore all the daily noise and panic in the market. Think about it this way. For a little while, the market's just a popularity contest. It's a voting machine. But give it enough time, it becomes a weighing machine. And eventually, the only thing that matters, the only thing that has any real weight, is the actual fundamental value of the business.
Okay, so you've got the mindset down. What's next? How do you actually put this into practice? Well, it boils down to three really important tools: value, price, and a whole lot of patience.
And right at the center of their toolkit is this one concept they say is the most important thing in all of investing, the margin of safety. And listen, this is way more than just looking for a good deal. This is about building a literal fortress around your investment. It's about creating this massive gap between what you pay for something and what it's really worth.
Buffett has this great, simple way of explaining it. You don't build a bridge that can just handle the weight of the truck. No way. You build it so strong that you leave this huge cushion, this enormous room for error. That way, if something unexpected happens, you're not even close to a disaster.
So let's just lay that out. The bridge is full capacity. That's the real intrinsic value of the business. The price you actually pay for the stock, well, that's the weight of your truck. See? By making sure your truck is way, way lighter than what that bridge can hold, you've given yourself a massive buffer against, well, pretty much anything that could go wrong.
Now, it's super important to understand that this whole system, it's not just about crunching numbers on a spreadsheet. Not even close. It's about people. In the world of Berkshire Hathaway, who is running the show is just as critical as how much money it's making.
So Buffett has this famous list of three things he looks for in a manager. They've got to be smart, they've got to have drive, and they have to have integrity. But he's always been crystal clear. If you don't have that last one, integrity, the other two will absolutely destroy you. It's the one thing that's totally non-negotiable.
And this isn't just some nice-sounding idea. They actually live it. Get this. Their headquarters has, maybe 24 people? And those few people oversee a global workforce of almost 500,000. How is that even possible? Buffett calls it delegation bordering on abdication. Basically, they find amazing people, trust them completely, and then just get out of their way.
This idea of trust even bleeds into how they pay people. They hate those complicated bonus plans that just make managers do stupid, short-sighted things. And Charlie Munger, he had the best line for it. He said typical corporate pay structures are like letting rats guard the grain supply. I mean, come on. That just perfectly sums up the problem, doesn't it?
Okay, so we've got the mindset, the tools, the people, but what's the engine? What's the fuel that makes this whole thing run? What is Berkshire's secret weapon, their unfair advantage that nobody else can copy? Well, it's baked right into the structure of the company itself.
It all starts with this absolutely staggering number, $165 billion. Now, that's not their profit. It's not revenue. It's something way, way more powerful.
It's a giant pile of cash that they get to use, and it's constantly refilling itself. This is what they call the float.
So where does a river of cash like that even come from? Well, finding the answer to that question means you found the real secret sauce, the engine that drives the whole Berkshire Hathaway empire.
The whole secret is insurance. It's actually brilliant. Think about it. You pay your insurance premium every month, right? Well, the insurance company gets to hold on to all that money, sometimes for years, before they have to pay out any claims. That giant pool of other people's money, that's the float. And Berkshire gets to invest it for their own profit. It's basically a massive, stable source of capital that gives them the power to wait for the perfect opportunity, something their competitors just can't do.
And having that permanent capital means they can be incredibly disciplined. Here's a crazy example. One of their insurance companies was in a really tough market. So what did they do? They voluntarily slashed their business from $366 million down to just $55 million. They'd rather shrink than write bad, unprofitable policies. I mean, who else can do that? It's a luxury that's basically impossible for anyone else who's worried about next quarter's earnings.
So when you step back and look at the whole picture, you realize it's not just one thing. It's not one little trick. It's a complete, perfectly interlocking system. You've got the mindset of a business owner, the toolkit built around value, a culture that runs on trust, and this unbelievably powerful engine fueling the whole machine.
So what's the big lesson here? The genius of Buffett and Munger isn't that they mastered some incredibly complex system. It's that they had the discipline, the sheer will to stick to a few simple, powerful ideas. And that kind of leaves us with a big question, doesn't it? In our own work, in our own lives, what happens if we just ignore all the noise? What's the simple, fundamental advantage we could create if we just focused on what really, truly matters?